gold is going higher along with Bitcoin and cryptocurrency because the new director is a fan of both. So again, I don't think that it's necessarily a safety play, could be a currency play. And of course, we always hear about, well, the dollar's too strong and gold should be going down. Well, guess what? The dollar's going higher and gold is going higher. And at the end of the day, it's a perfect roundhouse to do that and use gold. But gold may again be indeed used as a currency once again. And I think that's an issue. And again, when you listen to Bessent speak, you can tell that he's a gold bug. And I think that we're going to continue to see this rally. And the last thing is, I'm a big believer that there's not enough gold in the world to cover the amount of paper that has been sold on gold. So if we're getting a little bit nervous and you get a little bit of a short squeeze, that brings the professionals in to buy.
The gold market is at the forefront of the fundamental changes that have occurred in global markets over the past few years, ultimately leading to nearly uninterrupted increases in gold prices over the past year. Along with inflation, the threat of recessions in major economies and rising interest rates in some regions has driven more people to diversify their portfolios with assets like gold. While stock markets and bonds may experience unpredictability, gold tends to remain a steady player, offering the desired security and stability. Prominent analyst Todd Bubba Horwitz highlights growing support for a Fort Knox audit and notes that key figures in Trump's financial team are gold advocates. Bubba also warns of a potential short squeeze, as the physical supply may not be enough to cover the massive paper gold market. Gold prices extended gains on Tuesday, February 18th, as concerns over U.S. President Donald Trump's tariff policies fueled safe haven demand. Investors turned to bullion amid fears of a potential global trade war. With all major factors in play, Bubba expects gold to continue its rally, possibly surpassing $3,000, but anticipates a short-term pullback of 7 to 10%. He attributes gold's rise to inflation concerns and safe haven demand, emphasizing that inflation won't ease until supply issues are resolved. The bank has also revised its central bank demand assumption upward to 50 tons per month from the previous estimate of 41 tons. As per Goldman Sachs, if purchases average 70 tons per month, gold prices could climb to $3,200 per ounce by the end of 2025, assuming that positioning normalizes. Based on fundamentals, Bubba explains how many investors panic during market downturns, often selling strong assets like gold while holding on to underperforming ones. Now, we present the clips of Todd Bubba's insights from his recent interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates.
I think if you want to, gold, I think is great. We said all along, the few times we talked in the last 6 months, that we fully expected to see it continue to rally and look for over 3,000. I would expect here probably a little bit of a pullback from a trading standpoint. It's a little bit overbought. It's a little bit overdone. But I think it's telling everybody that inflation is still rising. And of course, we saw the numbers last week, CPI and PPI, which indicate that we got higher inflation. And, I believe in President Trump, and I think he's going to do a lot of good stuff, but there's going to be some pain to start with, and the inflation is not going to go down until we get everything back in the pipeline, so to speak, especially when it comes to oil, because with the oil, that's a big percentage of the inflation. So I think gold is riding the inflation wave. It's riding the safe asset play. A lot of reasons for gold to go higher, but as I said earlier, I look at it now and I would expect a pullback, and I wouldn't be surprised if we had a 7 or 8 to 10% pullback in gold, although I still like it and I would be looking for opportunities to buy it. I think that from a standpoint that it's basically going up parabolically, those markets don't usually last, and we should see some sort of a pullback here. Again, you look at the markets you look at the equity markets over the last couple of weeks. Now, they've been higher. Okay. Last week, the previous 2 weeks, we had those 2 Monday disaster days. That creates panic. And most investors do what we would call the wrong thing. They sell their good assets trying to hold on to the crap. And of course, that would coincide perfectly with selling their gold, which they cannot help but be profitable on gold. So they like to take the winners off the table when that is exactly backwards. You want to let the winners continue to run until they tell you that they no longer can run. But that's why the average investor usually loses their because they want to hold on to the dogs, the ones that are going down. And there's an old saying, buy the strong and sell the weak. Okay. It doesn't matter. Stay long the strong and get rid of the weak. But people don't do that. They do the exact opposite. So it makes a lot of sense to see people selling gold, because it's been one hell of a strong asset and it should continue. But again, when you're dealing with human psyche, you're dealing with psychology, people don't want to take a loss. They don't look as their overall net worth. My net worth is $1 million. Okay. I'm not looking at it as a package worth $1 million. I'm looking at each individual asset. And I'm like, well, this one's losing. I'm going to hold it because it's going to come back. This one's really strong. I'm going to sell it because I want to take the money. Completely backwards thinking, which is very common in the investing industry. Well, I don't even know if you want to call it safety. I think it's a great play to buy gold here. I mean, you look at Trump's, finance guy, Bezos, he's a gold bug. Okay, there's your guy. You got Ron Paul. You got a big thing now talking about let's go audit the Fort Knox. Okay, which we haven't done since 1974. Okay, you got a lot of reasons to believe that gold is going higher, along with Bitcoin and cryptocurrency, because the new director is a fan of both. Okay, so again, I don't think that it's necessarily a safety play, could be a currency play. And of course, we always hear about, well, the dollar's too strong and gold should be going down. Well, guess what? The dollar's going higher and gold is going higher. And at the end of the day, it's a perfect hedge. It's a perfect roundhouse to do that and use gold. But gold may again be indeed used as a currency once again. And I think that's an issue. And again, when you listen to Bezos speak, you can tell that he's a gold bug. And I think that we're going to continue to see this rally. And the last thing is I'm a big believer that there's not enough gold in the world to cover the amount of paper that has been sold on gold. So if we're getting a little bit nervous and you get a little bit of a short squeeze, that brings the professionals in to buy. And that's, I think, what they're doing.
For most of the 19th century, the United States had no central bank to serve as a lender of last resort, leaving the country vulnerable to financial panics and banking runs. Today, the Fed is tasked with managing U.S. monetary policy, regulating bank holding companies and other member banks, and monitoring systemic risk in the financial system. Various experts, including Todd Bubba Horwitz, critique the banking system, calling it a cartel tied to the Federal Reserve. Bubba highlights fractional banking, where banks create new money by lending at a 10-to-1 ratio, inflating the system. He supports a return to asset-backed lending, arguing that banks should only lend against real reserves, not artificially created liabilities. Many of the core problems in the lead-up to the bank failures involved well-known core banking risks, interest rate risk, liquidity risk, and poor risk management. However, if we look at the subsequent reform agenda, we see that the policy's emphasis has been on broader regulatory changes rather than addressing supervisory program deficiencies. Jerome Powell said that the Fed has taken steps to respond more quickly to several issues at banks, including potential liquidity, credit, or interest rate risks. Despite the risk of a banking collapse like 2008, Todd Bubba Horwitz insists that failing banks should fail while depositors are protected. He criticizes the Fed for enabling reckless lending and calls for real consequences instead of bailouts. Let's get back to the interview.
Banks are very tricky, and banks are really, they're like a cartel along with the Federal Reserve. I mean, you think about banking as a business model. They can borrow money from the Federal Reserve, on the Fed funds rate, right? And we've seen that over the past 6 months, the Fed funds have been cut 1% or 100 basis points. But if we go back to September 18th, the original cut, the 10-year notes were trading at 3.5%. The Fed funds rate got cut, which means that the bank, if they don't pass the rate cut off to the consumer, the banks are making more profit, which is exactly what has happened. So move the clock forward. We're 100 bases lower at the Fed funds rate, which does not help you and me, the consumer. The banks don't have, just because they got a rate cut does not mean they have to cut the rates for you, the consumer. So now the bank's borrowing rate is 100 basis points lower. The bank's lending rate is 100 basis points higher, saying the banks have got a 200 basis point extension or a raise, okay, to lend money. Now, again, the other problem is that when they borrow money from the Federal Reserve, okay, they can take that money and take that liability and turn it into an asset and then lend out 10 times the amount. So I think what Bezos is saying is no more. You cannot do it that particular way. I think that's the problem. And that is what's created the banking problems we've had over the last 100 years have been directly correlated to the banks maneuvering, because knowing that they had the Federal Reserve to bail them out. Okay. And I think that Bezos is saying enough, where the Federal Reserve is not going to bail you out if you continue at this particular rate of basically printing new money. Because when a bank lends out at a 10-to-1 rate, okay, called fractional banking, they are actually creating new money into the system. Well, I mean, how about if we just follow what the original laws were before the Federal Reserve was put into play? Okay, the Federal Reserve is nothing but a cartel, okay, owned by the banks. I mean, why don't we just do, if you remember, well, you may remember, you're young, and I'm young, too young to remember it as well, but the original gold to silver ratio is supposed to be 15-to-1. Okay, it's now 90 to 1. Okay, the banks were supposed to be able to lend on assets that they held. Okay, which in those days was gold. Okay, in fact, there are stories going back, if you've read The Creature from Jekyll Island, that they used to take rocks and paint them gold, throw some real gold on top, so it looked like they had more, so they could lend it out. Okay, what Basanta, I believe, is saying is that if you're going to lend out 10 to 1, you better have the assets in your vault to lend out that 10 to 1. You can no longer lend out on air or no longer take a loan from the Federal Reserve, take a liability, spin it through accounting, turn it into an asset, and then lend out $10 million. I think the banks are going to melt down. This is my concern, is we're going to see basically a repeat of '08, okay, because the banks are well overleveraged, okay? And of course, unfortunately, you and me, the taxpayer, are going to have to pay for it again. Now, see, I go for, if the banks collapse, let them collapse. I don't care. You should not be bailing out a failing business. You bail out the depositors that are in that bank to avoid the run on the bank. You let the depositors know your bank's going out of business, but your money is going to be guaranteed by the government and we're going to pay you. So instead of going and bailing out the banks and letting them make a fortune through the bailouts once again, let's just take care of the depositor and let new banks come in and new our organizations come in. I mean, look what they did with the savings and loans in the 80s. Okay. Again, if you're a bad bank and you're over leveraged and you can't make payroll, go out of business. The government, instead of bailing out you, the bank, and all you guys, so you can make your billions of dollars. And I got no problem with billionaire, but I do have a problem with people that are in a business that has no risk of failure. You fail, you go out of business. That's the way it should be. You should not have the Federal Reserve backing you up, allowing you to be very irresponsible with your lending policies and what you're doing, okay, and then allowing to bail you out if it doesn't work out.
Over time, gold has become more popular with institutional investors, such as hedge funds, pension funds, and private equity firms. As these investors seek to protect their portfolios from market volatility, gold is often considered an attractive asset class. Will we see a financial reset where gold is central to global monetary policy? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.